Welcome back. Now, market regulator SEBI has eased its disclosure rules for foreign portfolio investors after Chairman Tuinkanta Pandey chaired his first board meeting yesterday. We are now being joined by Sunil Badala, the national head of KPMG, and we are also being joined by Tejas, Desai, the partner and leader of wealth and asset management of tax at EY, and Surabhi is joining in on the conversation as well. Surabhi, good afternoon.
Hi, Hormuz. Good afternoon. I mean, just a bit of a background. This obviously, it sounds like a, good enough relief because what we have is that, you had to make additional disclosures if you were an FPI in India. If your total AUM was 25,000 crores or if the total exposure of your AUM, more than 50%, was in one single corporate entity. Now, this just goes back in time, just to revise our viewers' memory, back to August of 2023. And these new disclosure norms came in at the height of the entire Adani saga, when the stock prices were literally crashing. So from then, we've traveled a very long way. There have been several changes as well, several extension of the deadlines as well. And more importantly, there's been a carve-out that SEBI also allowed that, while you hit these thresholds, if you fulfill a certain set of conditions, then you still not have to make those additional disclosure requirements. So what has happened today is that one of those conditions, the definition has been changed. The threshold has been hiked, which is the first part of that definition, which was, the total assets under management that an FPI has in India. So instead of 25,000, now that limit has been hiked to 50,000. So let's try and find out to what extent does it help? Does it allay all the FPI concerns or not? Sunil, let me open the floor with you. That's really the question. Does it put to rest completely the ghosts of the August 2023 circular?
No, Surabhi, so as you correctly mentioned, this just addresses one element of the overall situation that we have. So obviously this 25,000 crore limit has been raised to 50,000, which anyway should have happened because SEBI itself has noted in the circular that the trading volumes actually have become more than double. So what was 25,000 crore way back in 22-23 obviously is much more than 50,000 crores now. So, but still that's a good move. So yes, until your AUM in India is 50,000 crore, you don't have to worry about, disclosure requirement. Having said that, of course, there are various other triggers where these disclosure requirements will get, kicked in, and therefore the fear of FPIs identifying the natural person as beneficial owner of the investing entities actually, remains. In many cases. But yes, as far as this relief is concerned, I think it's a welcome relief.
And how big a, Sunil, a relief is this? I know it's hard to get numbers on it. I remember when the original circular came, I think SEBI itself had made the contention that almost 90% plus sort of FPIs will be exempt from the purview. Only a very few handful of FPIs will be impacted by the requirement of additional disclosures. Now, with the threshold going up to 50,000, is almost everybody exempt?
I don't think so. I think the percentage will probably not undergo significant change. So whilst on the one hand, what SEBI said was correct, that more than 90% FPIs were anyway outside of this. But as I said, because of the trading volumes going up, I think, whatever 5-6% of the FPIs which were getting impacted because of the volume being higher than 25,000 crores, I think my sense is that many FPIs will still remain under the radar. Although I don't have the concrete data, but I don't expect any change in that.
Okay, fair enough. Tejas, let me get your perspective on this as well. So one condition has been relaxed, the other condition stands, which is that if you own more than 50% of your AUM is in one single corporate group, then you still have to make disclosures. And let's not forget that there is also that exemption list, right? Which over the course of the last 15 to 18 months, they also had a carve out that if you're a pooled vehicle in a jurisdiction which SEBI recognizes, then perhaps you can be exempt from these higher disclosure norms. So we come down to the same question. Are there still outstanding issues? Are FPIs still being impacted despite this relaxation?
Yeah, so Surabhi, two things. One is that the August 24, 2023 circular basically laid down two criteria for FPIs to provide granular ownership details. One was what we call the size criteria, which is what you alluded to, the 25,000 crore becoming 50,000 crores now. And the second was the concentration criteria, which basically means that if an FPI holds a concentrated a position in a single investee company, then he has to provide the granular details. Now, that criteria, as you rightly said, has not been relaxed. And SEBI's intention is that that is potentially perceived to be a violation of what we call the minimum public shareholding norms or the takeover regulation. So SEBI is not relaxing that criteria, and I think rightly so. It is relaxing only the size criteria. So any FPI still has a concentrated investment in a single portfolio company is bound to provide the granular details. But having said that, I think it's a welcome relief, to increase the threshold from 25 to 50,000 crores. Again, like Sunil said, we don't know the exact numbers, but it does provide some relief for the FPIs. And to your point on the exemptions, yes, there have been significant exemptions that SEBI has provided already in its August 24 circulars, which is, applicable to government entities, government-related entities, ETFs, listed funds, university funds. So there are a host of exemptions which were already provided. Those continue to stay, and I think those will provide meaningful relief. And I think that brings us to the point that, look, I think this will, rightfully exempt, almost 90% or more of the FPI population. There will be that 10% who will continue to have to comply with the granular ownership details.
So, Tejas, with this additional relaxation, and plus, like you said, they've already, announced a whole host of exemptions. I mean, funds which will be exempt even if they hit the threshold. So, all put together, should we expect greater inflows? This is not a question for today, but generally, because the framework is being made a little more liberal, should we be expecting this overhang to end and then therefore more inflows?
No, look, I think the increasing limit is a good thing. It will certainly be welcome. But I think FPIs have to recognize that India is an ID market. India will demand more data from them as compared to other geographies. I think that is not going away. That is something that is here to stay. But any incremental relief is a welcome step, and should go some way in increasing ease of doing business or ease of investing into India.
Sunil, your thoughts on this?
No, so I think I agree with what Tejas mentioned. See, look, Surabhi, to actually expect a greater inflow obviously will depend on a lot of other market dynamics, but certainly this is a deterrent which I think FPIs had. So to that extent, I think this is a welcome move. So I mean, let's just simply take an example of let's say an FPI with its investor group. Their ability to invest from 25,000 crore has suddenly gone up to 50,000 crore. So obviously, we have provided them an enabling framework to actually double their investments on an immediate basis. Now, whether they will take advantage of this framework or not is obviously going to depend upon a lot of other dynamics. But certainly there is a framework, and therefore to that extent, I think this is a great thing.
Okay. Final question, gentlemen. When we talk to several foreign investors, and I always remember Chris Wood because he's repeatedly made that point, talking about how it's difficult to register in India. It's still difficult to do business in India as an FPI. Some people argue on taxation. I'm leaving tax completely out of this, but purely from a disclosure and regulatory perspective, are we there yet? Or what are the other aspects which are still trouble spots where you would perhaps want to see more focus from the regulator? Quick, last word on this, Tejas.
Yes, since you brought up the tax issue, Surabhi, I do want to call out that I think March 24 has been a good day for FPIs investing into India. There has been a relaxation on the tax front in Section 9A, where they have relaxed one of the conditions. Section 9A was essentially introduced to give a boost to asset managers to relocate to India, to to come back to India. This was Make in India for the asset management industry. And I think they have relaxed one important condition by omitting the word indirectly, which basically required asset managers to trace granular ownership. So the two issues are interconnected. This is all about granular ownership, whether it comes from the SEBI regulations, whether it comes from the tax law. And I think if you look at the two together, then I think yesterday was a good chapter in the history of Indian FPI investments. I think I would leave it at that.
Sunil, you concur? Just quick 30 seconds. Any major outlier issue that still needs to be addressed?
So as far as this limit of 50,000 crores and the concentration limit of 50%, when we talk about granular details, means Surabhi, I have to provide details of each and every investor who's a natural person, regardless of a threshold. So, for example, let's say there's an individual who holds even one share in the investing FPI entity. I need to provide details of that. So maybe some kind of a percentage threshold, which is there, like in the other disclosure requirement, where it is like 10% or 15%, depending upon whether it is a corporate entity or a partnership. I think that kind of a threshold we can consider.
Okay. All right. Some more suggestions, but I guess both of you welcoming the fact that at least there's some ease that's definitely coming. The threshold limit being straight away doubled from 25,000 crores. Gentlemen, thank you very much for weighing in on what is seen as a positive development, largely for FPIs looking at India. Back to you guys.
All right, a step in the right direction, though some distance to cover as per these guys as well. But nevertheless, we will take that with both hands. Take a short break on the other side. Keep an eye on the markets, though. It's fallen off the highs. Nothing really worrisome. Just one of those dips after a big rally that we've seen. On the other side, Sachidanand Uttekar of Trade Bulls joins in with some trading strategies.